direction.
There you go. Alright, so everyone knows about it. I put it in the general too for the regular people. They know about it. They can check the thingy and find it. Oh, there. Alright, cool. So, where we left off last time, uh, we spoke about, we went over what price action is. Just a, quick little recap on what we read the first time. Um, it was the natural laws of trading. Um, we went over how you always gotta take care of your downside. The law of large numbers, paying respect to large numbers, with the coin and flipping it 10 times. How many the probability of it coming tails, it could be six, and then heads will be four. Does that mean that it's, a 6-to-4 ratio that's always going to come out, 6 times tails? No, because if you threw it 1,000 times, you'd probably be closer to 50-50. Um, so that was going over that topic. And then we got into what is price action. Went over the, having the buyers, with selling pressure. It doesn't matter about exactly how many buyers. It matters the pressure of it. There could be one buyer, selling or buying $1 million worth, and it could be, 1,000 people selling and buying just $1 worth. So it doesn't really matter about the amount of people. It's more about the volume and the pressure that's being traded. Um, so that was all the stuff we're going over there. And now what we're on are the chapter on is market structure, decoding the secret behavior of the markets. And after we read through this, check the charts, take a look at it, and whatever you got to do, take your lunch break, I'll just be reading and going over the charts. So I'll get started.
Sounds good, Danny.
All right. When I started trading, I always wondered if there was a secret pattern that the smart money knew that I didn't. Otherwise, how could you explain a sudden collapse in price when the market was looking bullish, or a sudden rally when the market was looking dead? Then I studied the works of Richard Wyckoff and Stan Weinstein. That's when things started finally making sense. You see, the market doesn't go up and down in a straight line. There is an ebb and a flow to it. If you pay close attention, you'll realize the market moves in stages: accumulation, advancing, distributing, and declining. This means if you know what stage the market is at, you'll never have to second guess whether you should be buying or selling. Everything becomes clear, as if you have x-ray vision for seeing what the market is really going to do. Sounding awesome? Let's get started. The first step is the accumulation stage. So basically, this is an actual pattern. This is like the Wyckoff accumulation pattern. It's like one of the most famous and most used thing. It's A, B, C, D. It's like that pattern that you see everyone drawing. That's what this is going to go over. So the first stage is the accumulation stage. An accumulation stage occurs after a decline in price, and it looks like a range market within a downtrend. So it looks like a ranging market within a downtrend going steeply down in price action. The logic behind this is that the market can only go so low before the buyers step in and push the price higher. When that happens, you got traders selling in the downtrend and traders buying at the cheap prices. When these two forces collide, the market goes into an equilibrium, otherwise known as the accumulation stage. Now it's called the accumulation stage because this is where the smart money accumulates their position in anticipation of a higher price to come. Here are some characteristics of an accumulation stage. It occurs after the price has fallen over the last 5 months or more on the daily time frame. It looks like a range market with obvious areas of support and resistance within a downtrend. the 200-day moving average starts to flatten out. So it's no longer moving, straight up or down. The 200-day moving average starting to become straight. The price swings back and forth around the 200-day moving average. So the candles will be staying around it. Now, what is important? Just because the market is in accumulation stage does not mean it will break out higher. It can also break down, and if that happens, the downtrend resumes. Remember, trading is about probabilities, not certainties. But if the market breaks out of the resistance, that's where we move on to the next stage. The next stage is the advancing stage. The advancing stage occurs when price breaks out of resistance from the accumulation stage. So after you have, I don't know if we can get this zoomed in, you have a steep, hold on, let me turn this light off. There you go. You have a steep dip in the price. That's the first step. That's when the price goes down, when it just drops off. So now the advancing stage is right after that. So the advancing stage happens right when the price breaks out of resistance from the accumulation stage, which is otherwise known as an uptrend. This happens because the market can't remain in a range forever. Eventually, one side of the market will dominate and the other will start a new uptrend or resume the downtrend. So for an advancing stage to occur, the buying pressure must outcome the selling pressure, which leads to a start of a new uptrend. Here are the characteristics of the advancing stage. It occurs after the price breaks out of resistance in the accumulation stage. You'll see a series of higher highs and lows. The price will be above the 200-day moving average, and the 200-day moving average is starting to slowly point higher. And there is another image right there, if we can get it focused. Right there. So you have the decline, and once it breaks through that resistance, that'll be our advancing stage. So we drop down first, break through the resistance, and now we're in the advancing stage. Third is the distribution stage. This is where the money starts coming. The distribution stage occurs after an advance in price, and it looks like it's a ranging market with an uptrend. The logic behind this is that the market can only go so high before the sellers come in and short the market. When this happens, you've got traders buying in the uptrend and traders shorting in at higher prices. When these two forces collide, the market goes into an equilibrium, which is otherwise known as the distribution stage. At this point, it's called a distribution stage because this is where smart money distributes their money away from their position in anticipation of lower price. So in the first stage, when they were accumulating, they were getting set up for, they were accumulating for the price to go up, and that's why it's the accumulation stage. And then the second stage was the advancing stage. That's where you wait for the break in the resistance. And the third is distribution because they're setting up their positions for the price to start to go down. Here are some characteristics of a distribution stage. It occurs after the price has risen for the last 5 months or more on a daily time frame. It looks like a ranging market with obvious support and resistance areas in an uptrend. The 200-day moving average starting to flatten out again, so it's no longer starting to, curve up, it's starting to flatten out. The price whips back and forth around the 200-day moving average. And then there is one more image right there. Let's see if we can get it zoomed in so we can pause and see if they need. And that's the stage that we're on now. Right. And the last is the declining stage. But before the declining stage, at this point, there's no guarantee the market will break down. But if it does break below support, that's where we move on to the declining stage. So if it doesn't break down and it continues to go higher, then you don't reach the fourth stage yet. You have to wait for it to break that resistance. Once it's ranging higher, you have to wait for it to break down before you can go into the declining stage. The declining stage occurs when the price breaks down of support from the distribution stage, otherwise known as a downtrend. This is because the market can't remain in a range forever. Eventually, one side of the market will dominate, and that's either the start of a new downtrend or the resumption of the uptrend. So for a declining stage to occur, the selling pressure must overcome the buying pressure, which leads to the start of a new downtrend. Here are some characteristics of a declining stage. It occurs after price breaks out of support in a distribution stage. So once we're, at the top and we're in the distribution stage, it breaks that little support line. That's the first characteristic. You'll also see a series of lower highs and lower lows. So you start seeing your zigzag, lower lows, lower highs on the way down. Price, the 200-day moving average, the price will be below it. And on the 200-day moving average, we'll start pointing down lower. And then there's the last example on that final stage, which is right there. And clear. All right. Now you might be thinking, what is the point of learning all of these 4 stages of the market? It's this. If you can identify what stage the market is in, you'll know whether to be a buyer or a seller. For example, if the market is in a potential accumulation stage, then you know there is a huge potential upside in the price if the price breaks above resistance. So you want to look for buying opportunities, perhaps near the lows of support, the breakout of resistance, or the first pullback after the breakout. And if the market is in a declining stage, then you'll want to look for a shorting opportunity, possibly towards an area of value like support, a moving average, and so on. Can you see how useful this is? And then we go on to, okay, I'll be honest, there will be some times when the market structure isn't obvious. So when you do take this scenario, so what do you do in this scenario? You stay out of that market. There are plenty of trading opportunities with cleaner market structures, so don't force yourself to trade and read the markets if you don't fully understand yet. Sooner or later, you will. At this point, you've learned about market structure and understand how the market really moves with the help of concepts of 4 stages. This means you know what to do in different market conditions, whether to buy, sell, or stay out of the market completely. However, market structure doesn't tell you where to enter or exit your trades. I've said that for the next chapter. I saved that for the next chapter. So read on. A summary is an accumulation stage occurs after a decline in price, and it looks like a ranging market within a downtrend. The advancing stage occurs when the price breaks out of its resistance from the accumulation stage, otherwise known as an uptrend. A distribution stage occurs after the advancing stage in price, and it looks like a ranging market in an uptrend. And the declining stage occurs when the price breaks down support, otherwise known as a downtrend. So that is just the basic going down, going sideways, advancing, getting ready for the move, breaking out, and then coming back down, waiting for the break of the support, and then taking your short position. So it's just kind of knowing either where we're going to be heading or going. So it just kind of gives you an idea, but it doesn't give you an exact buy or sell, entry. So that's where we find that out. Now, let me just see how long this is. This is actually the trading. All right. This is support and resistance. 11 years at school, 2 years at college, 3 years at university. All I needed to do was learn how to draw a horizontal line. And that's a quote by Tom Dante. I couldn't help but laugh when I first read that first quote. It sounds silly, but that's how much support and resistance matters in price action, and how much it matters for traders in general. So in this chapter, you'll learn about support and resistance, how to draw it, the truth that nobody tells you, the truth that nobody tells you about, and how to tell when support and resistance will break. What are support and resistance, and how do they work? Support, the horizontal area on your chart where potential buying pressure could come in and push the price higher. So support on the chart could be, anywhere. If you have support there, supports anywhere where you can have potential pressure coming into it. Support right here, support right there, support. So those are examples of support. And I drew lines right there, but support should not be a line. It should more be an area. Like that would be a support, and so on and so on. So you don't have an exact area because it may not always hit that same exact line. So you want to draw an area when you're drawing support and resistance. Resistance is a horizontal area on your charts where selling pressure could come in and push the price lower. So resistance is the same thing but opposite. If it's broken, it could come in and push the price lower. Resistance and these are horizontal. These are support and resistance. These aren't like trend support and resistance. These are just horizontal support and resistance. So then once we start seeing something come over here, you'll be able to kind of find where our resistance is. Once we start seeing a bearish candle and we start to flip around and come back down, then we would know that our resistance was at the very top. If it did, well, it wouldn't be that high. If it did flip, our resistance would be around here. That's why this indicator, the VPVR, is so, it's such a good indicator because it kind of gives you support and resistance at different price levels. Each big line is a different kind of support or resistance area. In short, you can treat support and resistance as areas of value on your chart that can help you buy low and sell high. And then he gave an example of support and resistance, but I just did it on the chart for you. So it's when you have multiple touches in a candle The more touches you have in a very short period of time, means that we tried, and we couldn't get it. So that's a strong area of support. Um, One bounce off, it's still a resistance, still a support, but it's not, as strong. The more that it keeps on bouncing off it and then gets rejected, that means a lot of money's been trading at that area, and it makes that price level a lot stronger. And that's why the volume goes a lot higher. This is showing you how much money was spent at these areas. So the longer a candle is staying at this area, it keeps on staying around this range, the higher, the volume is, and the harder it's going to be to break through that resistance or that support. These would be like easier to break through if single ones like that right there, it would be something easy to break through because there's only one little touch right there. So anything that has something, a one touch and a bounce off wouldn't be too hard unless you look back over time, and you can see that right here it doesn't look too long, but if you take it all the way back, there's been a lot of movement, and it's a long-term resistance. So that's support and resistance for the horizontals. Now the question is, how do you draw support and resistance? As you already know, this is subjective, and there are many ways of doing it. So here are some guidelines I use when drawing support and resistance. Zoom your charts out so they show at least 300 candles. Draw the most obvious levels. If you need to second guess yourself, it probably isn't worth drawing. So you're only drawing out what you can clearly see. And if you're thinking if that's a support resistance, don't draw it. It's right away. That's just the first steps. And then the third is adjust the levels to get as many touches as possible. And that's what we talked about, in the last video, and mostly in every video where we talk about support resistance. You want to draw your lines to get the most touches you can. The same when you draw like your trend lines. You want to get the most candle touches as you can. So we can go to a daily chart and see what we're talking about here. Remove these lines. So we want to draw it as many as we can. So we would probably take it from here, boom, boom, boom. We got those all touches right there. And since it's an area, it doesn't necessarily have to come down to it. So, that's a bad way to do it. So I know it had to be higher. That's how you would draw your long-term, support and resistance. How many candles you could touch at one shot. And on the top, I'm pretty sure you can clearly see where the resistance is on this chart. Pretty sure you can tell where it's at. It's right there. So that's where you're gonna have your support and your resistance. And over time, as you can see, this is the daily chart. We've been, we've had some uptrends, we've had some downtrends. So whenever the market is, moving, down, we're in a downtrend. And then anytime it's moving up, we're in an uptrend. But throughout this whole time, we've been ranging in and out of this area. So we've been actually like consolidating in a way. We've been trading between, move that down. This is our all-time high, 69, but I'm not gonna sit here and fight for that. 69 and 29. So we've been basically, for the past year, have consolidated. And that's why this bull run has been so different than any of the other ones, because it's unlike something we've ever seen. We've never seen Bitcoin consolidate. You wouldn't consider 29,000 to 69,000 consolidation. But when it happens over the past year, and you zoom out and you look at the big picture, you can see that it's really a consolidation that we've been in this whole time. So there's a lot of different ways of viewing. Did we even go into a bull run, or we had our bull run from back here, and then went straight into some type of accumulation? And we don't know. Let's see how it plays out, but that's why it's very different than what we've normally are used to seeing, which is a big pump and then a second even bigger pump with like a blow off top, a huge big pump before a crash down. Okay, so clearly it is difficult to explain how to draw support and resistance in a book. So we have a chart. That's why I've created a training video to teach you how to do this step by step, which you can access and check out at priceactionsecrets.com/bonus. So if you want to check out the video on support and resistance, it's priceactionsecrets.com/bonus. Next, let me share this with you. Some concepts about what support and resistance and what many traders get wrong. The more times support or resistance are tested in a short amount of time, the weaker they become. So, as I was saying before, the more times we hit it, the weaker we'll become to break it. If we don't break it, then it's become stronger because we've hit it so many times and bounced off. But the more times we keep hitting it and hitting it, it gets weaker and weaker. And the fact that we didn't break through it means that it's a pretty strong support. So the more times that we hit it in a short amount of times, where basically it's like a wall, and we're punching it rapidly over and over again, it's getting weaker and weaker and weaker. But if we don't break through that wall, in that short amount of time, that's when things go the opposite way, and they reverse, and we actually go up or down. I know this goes against what most trading books teach, but just because something is printed in ink doesn't mean it's correct. Never trust anything, always validate it. Remember, so here's my reasoning for telling you this. The market reverses at support because there's buying pressure to push the price higher. The buying pressure could be from institutions, hedge funds, or banks that have orders to fill at certain price levels. So it doesn't necessarily have to be someone sitting at their computer waiting. They could have a limit order set up at, probably hundreds of thousands of people do at at 70K or something for a buy. Once we break 69K, that they have this order already in there, so they don't even have to be by their computer. There's all these orders that are previously set. So here, and when the price retests support, some of these orders get filled. So the more the price retests support, the more orders get filled. And when all orders get filled, who's left to buy? No one. And that's when the market ends up breaking down. And then he shows of it being kind of like this, exact example like this, trying to, if we keep hitting this over and over again, and we keep trying over and over again, eventually all these orders are going to keep getting filled and filled and filled, and that's when the market goes down, unless we end up breaking the opposite in the same way, unless we keep hitting this until we break it. But again, it keeps getting stronger and stronger though, because of the volume and activity that's been going on. So it's a double-edged sword. support and resistance areas on your charts. You might be wondering if support and resistance are always horizontal. Why do you draw them as lines? I do this because it makes my charts look cleaner and less cluttered, but I treat them as areas. So that's what I also do when I draw my technical analysis for my indicators for the class, and when I go over the support and resistance areas, I'll put a line, but I don't mean that exact price point. I use it as a as an area for people to kind of get an idea of. So why is this area on your chart not a line? This is a good result of two groups of trade. Oh, this is a result of two groups of traders. Traders with fear of missing out, FOMO, and traders who want to trade at the best possible price, cheapos. Let me explain. FOMO traders enter a trade at the moment price comes to support because they're afraid of missing the move. And if there's enough buying pressure, the price will barely touch support before rallying higher. Or on the other hand, cheapo traders only want to trade at the best possible price, and they look to buy at the lows of support. If there are enough traders who behave in this manner, the price will reverse near the bottoms of the low of the support, because that means too many people are putting their entries down at the bottom. Here's the thing. You have no idea which group of traders are dominant at any time, and whether what you are seeing is due to FOMO or what you're seeing is due to cheapos trying to, short the market. This is why you want to treat support and resistance area on your charts and go in with expectations that the market could reverse anywhere within the area. When the price breaks support and resistance, when the price breaks support, it can become resistance, or it will become resistance. When the price breaks below support, that horizontal area could become future resistance. And when price breaks above resistance, that horizontal area comes future support. So as we have here, for an example, we were using, this as our support line. That was our support. And then it kept on going through, and as soon we came down, we broke it. Now we broke that. We broke that support, and it turned into resistance all throughout here. And now I've been struggling to get past it. So it was support, broke down, and now it's resistance. So the same thing goes for trend lines and trend support and resistance. It could be support 1 second, and then as soon as it breaks it, it flips into a resistance. So you always remember that it's not always going to be one. That down the line, it could change and turn into totally something different. It could flip its script on you. You might be wondering if support and resistance. That's just that part. Hold on. When the price breaks below support, that's when it flips into resistance. When it flips resistance, that's when it goes into support. But why does this happen? Here are a few theories to explain it. Losing traders want to exit their trade and break even. Imagine you bought at the support thinking the price would rally higher. The next thing you know, the price collapsed and you are in the red. So you hope for a rebound to occur so you can exit your trade and break even. and there's no win or loss on that trade. This behavior creates selling pressure at previous support areas. And if there's enough selling pressure, the price could reverse at the previous support area, which now becomes resistance. Traders who missed out on the breakout move. Sometimes the market breaks out unexpectedly that you missed the move, and you regret your inaction, wishing you had paid more attention to the markets. So what do? Tame the market? Regret the market? No. You place an order limit at the breakout point. If the market ever retests that level again, you won't let it get away this time around. For example, if the price breaks out of resistance and traders miss the move, they'll place a buy limit order at the previous area of resistance. And if there's enough buying pressure, that price could reverse at the previous resistance and now become support. So it's all about, the losing traders that want to exit, their trades and break even, and the traders who missed out on breaking their move. That's kind of why it flips into it, because it's where these orders are placed. They're key levels. So a lot of orders are placed either to be going up above it or to be selling down below it. Because anytime it gets crossed, normally something big will happen in either direction. If it gets crossed in this manner, we're going to see the pump up, and if it gets crossed down in this manner, we're going to see the continuation down. So there's a lot of money, being put in at these areas. So that's why they flip support to resistance. Right, I think this is getting towards the end. Self-fulfilling prophecy. Here's how it works. Even if traders observed a phenomenon and have a similar and have a belief in the similar manner, this phenomenon will become true. For example, if the price breaks below support, and most traders expect this area of support to act as resistance, then guess what? If there's enough selling pressure, then this previous area of support will now become resistance. But a word of warning: don't use this self-fulfilling prophecy as an excuse to apply all sorts of technical analysis to your trading. It doesn't work that way. Because if you are going to use something that no one else has heard of, you're likely the only one fulfilling that prophecy. In my opinion, stick to the most popular concepts of technical analysis, because most traders will adopt them one way or another. And when they're trapped by using these tools, that's when you can exploit the situation to your advantage. We'll get more into that later on in the book. So what he's explaining there is focus on what you see right off the bat, and using tools and stuff right off the bat that you see, because most likely everyone else is going to see that, and newcomers are going to see that. So you want to use all those tools first, and that way you're kind of doing what everyone else is doing. And then when they become trapped and don't know what to do, that's when you start pulling out your deeper technical analysis. When they're all stuck and don't know what to do, you'll be able to have backups to tell you which way the market's going to go, and they don't. And throughout the rest of the reading, in our future sessions, we will figure out how that's done. There are other ways to identify areas of value, not just support and resistance. You've learned support and resistance are horizontal lines on your chart with potential buying and selling pressure lurking nearby. However, this isn't the only way to identify the area of value on your chart. You can always use tools like the moving average, trend lines, channels, and so on to help you identify areas of value. For example, in a healthy trend upwards, the price tends to respect the 50 period moving average, which is what I would occasionally use for support and resistance over the just to get a general idea. So let's put one on. So exponential moving average. Pop one of them on. 50. That's like that. And we'll make it. My colors are all different here. Make it green so we can see it. Boom. And thicker. And get rid of the other one. Alright. Okay, that's the 50. So it usually uses that as support and resistance. It kind of bounces off of that. You can see over time that it kind of pays respect to it. It may go over it in certain little spots. That, but that's where you would come down to like your RSI or other indicators and tools that either the community ones or premium ones that I code in and I give you guys. You'd be able to use tools like that to be able to see like there was a bullish divergence here, so well, you would think that that was gonna be a breakout, but you would see on the RSI that you have hidden bearish divergence. So you would kind of cross this out, and you would also see that we're at the top of market cipher's wave trend about to come down. So you wouldn't really take that trade. And you also don't trade off of just little breaks because they always cross it. It's just used as a general basis. Now when you put two of them together, like the 20 and the 50, and they cross each other, that's when we can get more into them giving you actual signals. But we'll get more into that later on in the next episode of this book. So where were we? All right. Whatever technique you use, the concepts I shared earlier still apply. You are always dealing with an area on your chart, not a line. And the more times the market retests an area within a short period of time, the greater the likelihood it will break. How to tell when support and resistance will break. There is no way to tell for sure whether support or resistance will break, but here's a few things you'll learn and want to pay attention to. Resistant trends to break in an uptrend. So resistant trends to break in an uptrend. Got it. As you know, an uptrend consists of higher highs and higher lows. And I believe you know what higher highs and higher lows are. I'm sure. Higher. I mean, lower low, lower low, lower low, higher high, higher high, higher high. So it's when after each little pivot, you're making a higher high and a higher low. That's how you know that you're in a trend. This is the end of the chapter right here. So, and for it, as you know, an uptrend consists of higher highs and higher lows. And for it to continue, the price must break out of resistance or swing high. And that's why I speak about it making a new higher high. It's kind of like using these areas of support and resistance without having to actually use them. Because if we made a new higher high after a trend, like not that over here, we kept going lower, a lower high, a lower high, a lower low, a lower low, lower, lower, and then we finally came up and we made a new higher high. This is our previous high, and we came up right here and we made a new high, and it was higher than its previous high, which is a sign of the trend is reversing. So you kind of look for that, that first higher high, and then you hope for that low to come, for it to be higher than the previous one, and it was. So we had our low right here. We came up and we set a new higher high up here. This is our previous higher high. Bounced up, and then we came back down. This is our low, and our previous low before that was all the way down here, and even this we broke. So we're higher up, and we can confirm that we went into an uptrend now. So on the 4-hour Bitcoin chart, we can, confirm that we are in an uptrend now, that we made a new higher high and a new higher low, and that we also went parabolic. But we can get to that another day. Support tends to break in a downtrend. Support tends to break in a downtrend. Likewise, a downtrend consists of lower highs and lower lows. So opposite of trending upwards. Lower lows, lower highs. And for a downtrend to continue, the price must break out of support or swing low. So just what I said in reverse. We don't need to really go over huge examples, but we were making higher high, and then boom, our next high, not a higher high. We, even if it came down like that and that little dip was counted, not a higher high. Not a higher high. So it gives you a sign that that's where that was coming in, because we didn't make a new higher high. If this would have continued up and was moving, boom, boom, and went up a little bit, and we made a new higher high, we would have been continuing our trend. But we didn't. We came down, and we didn't set a new higher high. So we didn't cross this area. This area. We didn't cross that, which sent us on our downtrend. Let's wrap this chapter up. Higher lows into resistance are a sign of strength. This looks something like an ascending triangle. It's a sign of strength because it tells you a buyer is willing to buy at a higher price, despite that price being near a resistance. Lower highs into support are a sign of weakness. This looks like a descending triangle. It's a sign of weakness because it tells you that sellers are willing to sell at a higher price despite it being near support. So it's when they are actually taking positions, even though it made a new higher high. There's no example right there, and I don't want to take forever to find it, but it's when, I don't know if you'll see it. There we go. Boom. So it's when they trade right at the top before it's gonna break, before it's gonna collapse. They're taking the trade because a new higher high was set near a resistance. So if that new higher high or that lower low was set towards a resistance, we know that they're willing to sell, even though it may break down. So it's showing weakness in the market. And this is the summary of this final chapter. At this point, you learn the truth about support and resistance, how they work, and how to tell when they'll break. In essence, support and resistance will tell you where to buy and where to sell, but they don't tell you exactly when. But don't worry, we'll cover that in the next chapter in the next course. Summary. Support is a horizontal area on your chart where potential buying pressure could come in and push the price higher. Resistance is a horizontal area on your chart where selling pressure could come in and push the price lower. The more times support or resistance is tested in a short period of time, the greater the likelihood that it'll break. Observing support and resistance is one way to identify an area of value on your chart. Others include looking at the moving average, trend lines, and channels. So, real quick, trend lines would be like a trend line like that, and then channels would be same thing. If I drew that, a channel, you can use the same tool. You kind of put your channel there, and then you can go down to the bottom, and then there's your channel. So I don't know if you know about that tool, but it's called the parallel channel. And it's an easy way, it's a good way to be able to draw out, simple trend lines without having to draw your support and resistance both ways. You can just draw one of them off the bottom, angle it up right there, and to the top. There you go. That is our channel. And then you could see how we tried breaking it, setting the new higher highs, came back down, didn't set a new high, well, had a double top type of situation, broke down, and then started selling. And then last two are support trends to break. Support tends to break in a downtrend, or when there are lower highs into support. So when there starts to be lower highs into support, that when it seems like it's going to break. And resistance tends to break in an uptrend when we start to see lower lows coming towards that resistance. So when we have our resistance drawn out in either way, support or resistance, and we're getting close to that point, whenever we start to see that new lower high or that new higher high, whatever it may be, new lower low or new lower high, that's a sign of reversal coming. So that two chapters. Our next ones are going to be the fun ones. That's where we're going to be going over the candles and different patterns to look for on your chart. So next time we have our one-on-one like this, we'll be able to go over candle patterns. But this was all about support and resistance. So yeah, what would you think? There we go. We can do some stuff on the chart. Hope that was educational enough for you. Hopefully you learned something. Love. I know you're probably eating, it's all good. But hopefully you got that. Let's look at some no, actually let's go to the lower time frames. And let's see. Where's my where is it? There we go. Draw trend lines. Oh, she used the other one. breakout right there. So you can see we broke out right there. Came up, we touched it, and we finally broke out. And according, let's see the VPVR volume. So the more we have in, the more it will show us. Yeah, so we're coming up to a big resistance that we're gonna have to fight through. Let's draw this out. Not like that. Not like that. Where's my fucking feet? So we are going to have to get past this area. And that's fighting versus all this volume that has taken place throughout. Use the ray, I guess. All this volume, according to the VPVR. You know, we have our big spike right there. And then we have a little bit of room in the 43K area till we hit 44. So we're going to have another spike of really high volume to break through. Be able to see this on super low time frames even easier. Like right now, that may not seem like a big thing, even though we're on the 2-hour chart. It's $1,000 move right there. But if we go down to like the 30-minute and the 15-minute, we gotta break through that. And as you can see, the difference in using multiple time frames is you can kind of get a better idea of what's happening in that big move. Because over here, it looks like, it looks like we're not right there. Here, it looks like we're just crushing it. Like there's no type of, bearish momentum or anything. And you come down to lower time frames, you can kind of see how it's playing out. That we do actually have some type of momentum downwards in the middle, and now we're having a rounding type of top around the same exact, a bunch of little tips touching around the same lines of VPVR. Switch over to our candles, gives us a whole different view. And that's only on the 15-minute chart. So it doesn't show too much too much strength to it. Now if this bearish divergence, which is way bigger than the bullish divergence, the hidden bullish divergence, but it's after it. So but get away with it because our bearish divergence was over here, and divergence is when it's moving in the opposite direction. Let's move this out of the way so we can see it. It's when it's moving in the opposite direction. So from here to here is where we had that bearish divergence. And that bearish divergence, we went from here and we had a down trend right there. But if we look it up at the same exact point on the chart, same exact area, right there, we went from here, but the price went up, which shows that this is just my RSI, but it's just a little bit more intricated with the the downchain channels, or you could throw multiple different channels on it. You can throw your Bollinger Bands on it. So it's just a little bit more educated RSI, and there's two RSIs actually, and a moving average, a 21-day moving average. But yeah, bullish and bearish divergence is when you see an opposite in the momentum, and RSI is a momentum indicator. It shows how much momentum is behind that move, and clearly it was showing that, you know, the momentum was actually falling off even though we were going up. But there is, on the same note, bullish hidden divergence right after it. And it takes us from here to here, showing that it's not too significant because we're not seeing like big gains and big steep crosses, but it is there. We're seeing our point from this RSI to this RSI going on a downtrend, and then when we come up here, we see the price going in the opposite manner. It's losing momentum, but we are gaining it. That's hidden divergence because it's opening the same way. It's showing it this way and then going up in the price. It's hidden divergence. And bullish divergence, this whole long across multiple planes, and it's still going up because both of these hidden. I could draw it out, you probably see it a lot better. Line. Normally you would have one of them going the opposite way, and that would show you bearish divergence and hidden, bullish and bearish divergences. But hidden versus regular, they're still moving an upwards trend. Like that's a downwards trend, that's a downwards trend. But it's over a longer span of time. On here to here, it's going all the way across there. Here to there, it's going all the way over here. So that's what we got on that 15-minute, which isn't really too, powerful to hold against. So we could see if we have any diverge going on in Bitcoin any higher up. Yes, we do. And you could see how the lines, how tight they get. They used to be that big over here on the 15-minute, how wide they were. And then to go into the 4-hour, you can see everything, how close it got. Move the drawings. Alright, so we played out the hidden and the bullish divergence. Bullish, that the regular divergences are always stronger. I just have the hidden on there just to see. But, they're good to have. It showed us, this tiny little dip here. But regular divergences are what you kind of want to be looking out for. And they're shown in different colors. Regular divergences would be blue. Hidden would be yellow. Regular, bearish divergence would be red. Hidden will be magenta. Whenever I'm using these indicators, I have so many of them, and I supply, all the students with them. So it's that way we are all on the same track whenever we're doing these live streams and just do them live for the hell of it, just so whoever can possibly be roaming around on YouTube comes across it may be interested. But normally we would do this in the server, but we're just trying to show people that we're over here in the Discord doing things that other people aren't, giving out, premium tools and best programs, buying programs and just giving them out, coding indicators left and right, and buying them, changing them up a little bit and giving them out, just so we're all on the same page. We're all about giving over here at CryptNation. So it's a good place to be. So just that, you guys, whoever's on YouTube, whoever sees this, comes across it, check us out. I don't really do live streams. That's why it's kind of off the top of the head. It's not as easy as pre-recorded videos where I can edit stuff out. So there's a lot of just taking the time, thinking about something, saying one thing, and then realizing, wait, hold on, I gotta change that up. So live streams aren't, my forte. I apologize for that. But pre-recorded videos are always on point. Even just 24-hour support, being able to call, like, I'm a business number, call me up, ask me a question, let me know what's going on. Buy and sell calls starting back up again. We stopped them for a little bit because of Bitcoin was not doing anything, and it was controlling the market way too much, and I don't want to get my students wrecked by seeing a perfect setup on an altcoin and then Bitcoin going and taking a complete dump. And it's happened a few times when we're doing our paper trading sessions, and people got wrecked in it. And that's why I was like, I'm not trying to do calls until I see a actual reversal. And this may be it. If we can break this line, and then we could finally say that we breaking this downtrend. Kind of broke it right here, but of course we had this whole FUD situation with the inflation and the taxes, and then now Ukraine. We also provide, well, I give out market cipher, which actually showed this perfect bullish divergence right here. Showed us it right there. Boom, boom, boom. You would have bought on that, and showed us money flow. This is a really, and I changed it up just a little bit for copyrights. It's actually market cipher, SYPHER, created by CryptNation, Danny DeFi, not CryptoFace. This is not market cipher. This is market cipher. So, yeah, you can see that the money flow is severely coming into the market, like within what, how many, yeah, a day, one day, 27th to 28th, one day we went up almost 100% in money flow. There we go. And we also have market cipher A, and market cipher resistance support, not market cipher support and resistance, resistance and support. And you'll get that, as a student or even as a member, depending. No one even comes close to our prices. Put a link right there real quick. That's really coming up, man. Look at that. Our VWAP has shot up. This is the weighted, moving average, weighted volume moving average, and it completely shot up This is our RSI up here. You can also toss in histogram, MACD right behind it, so you can kind of get an idea more. Change the transparency and kind of see what's going on. But this is looking pretty good for that. Let's check out the overall market real quick. There we go. That's on the week, on the day. I don't know why that's over there. Yo, move. First time YouTube's gonna see someone punch a hole through their computer. But this is Binance, and boy, look at all that green on the day. I hope I don't go to the hour, see a whole bunch of red. Oh jeez. No, but it's not that bad. Small pullback. Check out. Let's check out FTX. See what we got going on. Oh my god. Okay. Doing good. Waves call that we made. Saw that bull flag yesterday. That was a great call. That's all the FTX coins. Go check out the top 100. See what's going on. Wave taking over for the day. Terra Luna. Anchor. Yeah, if you don't know about Anchor, Luna, take your Luna, put it into your stable coin if you're unsure of anything. You're not worried about the volatility of the market. Toss into a stable coin, TUSD. Come over to Anchor, and you don't have to worry about volatility messing with it, because TUSD is a stable coin. It's always going to be pegged to to the dollar, or pegged to how Terra Luna stakes it to the dollar. And you get like 20% APY off of it. While we're here on YouTube, let's see, show some other people what we go over. You guys know about dyor.net. I also have the API key to get the app on your phone, so you can have your trend scanner and everything. You can know exactly what's going on. The RSI tells us to sell. So it's one little tool. I don't even know why I gave that out, but there's like dozens more that could really help your trading out. But Anchor, we also have what I'm invested in and putting more in. Definitely putting in more now with this pump. I need to do it soon, actually. It is Libero Finance at 158,000% finance, 158,000% fixed finance, because Libero is not on the actual blockchain. It's just it's on actual it's on multiple different farming platforms, so they're always constantly getting more and more Libero, and they do have a burn mechanism and feature in tokenomics. It's anti-whale proof, because of the prices. It's like the 30% fee to sell, because it's meant to be like a mining coin. It's a straight hold coin. You're not supposed to buy and sell this coin. You'll wreck yourself because of the fees. But yeah, just even if I put, well, I have more than 600, but I put 10 grand in. That was 2. yeah, well, it's a 1.5. There goes to so in a year, I mean, make about $1.5 million interest as it compounds, and that's the best part about it. You get like your 0.7 APY. You get it paid out every 30 minutes. Every 30 minutes. Um, so that means, every day, you're getting like, what, 24, I don't know how many you're getting, the hell of, yeah, 24 payouts. So every time you get a payout, your interest is being paid out off of how much you have, and you're getting paid out in Libero tokens. So start out with 1,500 of them. A month later, I have 1,600 of them, and I'm still getting that every 30 minutes. That 0.7 APY off of 1,600, and that's why 6 months, you're only getting 40 rand. 40 and 40 is not $1.5 million, 600. 40 and 40 would be only $80,000. So how that makes sense. 6 months, 6 months. That's a year. How is a year going to turn into almost double? It's because it compounds. And seven, it's $1,000 a week. But in a month, there's only 2, 4, 6. You know what I mean? A certain amount of days in a week. You only get 4 weeks in a month. But yeah, you get your first little pickup, and then boom, how that jumps. Because you're only getting a little bit of interest here just to raise your rates. You're getting your little APY off of it for that first, couple, weeks. You're starting to stack up, but then your APY starts to pick up and build up, and then you start, longer you're in it, the more you're making. So Libero's a pretty one. This is a Titano fork. They've been audited 3 times. So they're official, actual platform and token. You can buy it on PancakeSwap. You can buy it on Thorum, which is the launch pad where it was launched. They also have staking and everything. This is where it was launched. Libero. And you can also gain Libero by just staking other types of coins on the Thorum platform. The multiverse capital coin is another type of staking type of safe moonbeam coin. But you can get Libero off of that, and they also have a metaverse game. So you can get paid out in Libero. Actually, you can get paid out in 3. You get 2 times the Libero. You get Ipachiro, and you get Thorum token, which is right here. You can stake them. I'm gonna hop into that. But yeah, these are all little things I'm teaching, students, all new things that come out left and right. Sunday swap, ISO drop, coming right around the corner, man, right there. Everyone's all involved in that. So, yeah, if you want to join our server, be glad to have you guys there. You check out discord.st, Discord Street, and you just search CryptNation. Find our server over here. You can vote for us and join it. Yeah, I didn't fill the recaptcha. We have a free channels. I don't put the best stuff in there, but there is stuff in it. Like there is stuff in the free channels, and then we have our premium Platinum Academy. So that's all that. check it out. I think we wrapped it up. We went over everything on Bitcoin, went over Anchor Protocol, staking Luna. Trying to think of, we went over my new site that I got the API for. You can get on your phone. I can send it to you. It's got a lot in it. Not too many people know about it. It's got scanners. And this is without even having to go premium and everything, but you can get, all your good information that you need, how the market's looking, the upper Bollinger Band breakout, green. News over here. So it's another resource platform you can utilize. Yeah, there's definitely a Pachero. Take a look at that. Let's see. Oh my God, so bright. What was it? EPICH. EPICH. It's not even on. Oh, I lied. Oh, no, that's Epicure. That's the game. That is the game right here. Which we're gonna do a stream on that. I don't know if it's pre-recorded content. I don't know what it's gonna be, but we're gonna do a stream on that. I'm gonna hop into the game, play it a little bit, start doing a more metaverse content. We'll go into Decentraland. We'll go into Sandbox. We'll go into check out the Polygon land. See what's going on in the world of the metaverse. See how stuff's playing out and do videos like that, so everyone can get an idea on how they are. The number one NFT game and blockchain game, Splinterlands. Now when they say number one, that's just like one, two resources, two articles that were, I forgot which ones. There were Brave pop-ups. One's on Cointelegraph, one's on Bitcoin Magazine. I don't know, something like that. But number one blockchain game. That's because they're backers and they're partners and they're there you go, CoinDesk. They have huge partners, and you're gonna see insider information here. You might see Ubisoft right there. So imagine seeing Ubisoft, one of the, if not the largest, well-known game creators there is. We'll be partnering up with Splinterlands. So if you need a referral code for any of these, you get bonuses and everything like that. But yeah, I think that's it. Don't forget about, make sure you're safe, staying safe with NordVPN. You gotta always be safe and get around these barriers too. So make sure you do that. And my other sponsor video would be Unstoppable Domains. It's a great place to be looking to invest in for short-term trades, because you can trade it right on OpenSea as an NFT, but it's a wallet right off the bat for all your cryptocurrency coins. It doesn't matter which wallets you have. You can mix up your Trust wallet, your MetaMask, your Coinbase wallet, your Crypto.com wallet. You just put whatever addresses you want into it. The best part is that they're linked. They're partnered with Polygon now, because I bought an Ethereum name service, an ENS, and that charged me a lot of money. It's just ridiculous compared to Unstoppable. It was insane when I was like, I had to pay $40-$60 just to put my Twitter name on there because I had to pay a gas fee for every transaction sign I had to do. Unstoppable, you don't. And Unstoppable also has their extension, which turns your web browser into your own little gateway to the metaverse. So you'd be able to check out, I have a few of them, but they're not really set up yet. But you'd be able to check out Web3 sites right from your browser. So yeah, and it's also going to be your personal identity in the metaverse. No more signing up or anything like that. Like for signing up for any type of website, you don't have to fill out all your name, your email, get your confirmation code, your phone number, send a text message. You don't have to do none of that. All you have to do is give them your domain name. So it's going to be your key to the metaverse. It's also going to help people send you money and how you send money instead of having an computer read wallet address with 30 digits. I just tell them to send it to CryptNation.bitcoin or CryptoWTF.NFT, CoinJect.crypto, and PlanDeFi.eth, even though I'm not planning on using Ethereum name service. Let's see how we're doing over here. Actually, let's check out DeFi Llama. I don't know if you know DeFi Llama, but this is where you can check out your total value locked. Or the platform, the DEX is where money is staked. Right now, number one is Curve. That's because they have, so much going on with their chains. But they're number one. You can also check out airdrops that are coming. It's a great place for you to keep up to date, how to do your own research and stuff. So we'll have full videos on how to act. Well, we've already done some of them, but there'll be a lot more on how to do your own research. Check out the oracles. Porsche, who do you think owns most of the oracles, or the king of the oracles? Chainlink. And Evaya, let's see what's on Evaya. The more they have changed the rankings. They're exceptional, excellent, very good, good, average, poor, very poor, extremely poor, severe issues, distress, and unrateable. Just yesterday, these are all dark orange and red. So we completely flip the script on it. I wish I had a dark mode on how they do. Yeah, Terra Luna I'll be looking at. Yeah, they do it with an AI type of AI algorithm to get their scores, sentiment, and some type of AI search. DeFi projects, Luna number one. NFTs, Decentraland. What I'm looking into is Ultra. Ultra is going to be the Steam of the blockchain, like computer gaming. Steam, the biggest platform for gaming, non-blockchain gaming. Ultra is going to be that. So just imagine how big that's going to be. All the Steam games are going to be on there. Like so how everything is up. You got Gala, you got all the places that your like games can be. Like Decentraland, Axie Infinity, Sand, all these games and everything. They're all going to be on Ultra. It's going to be the hub for all the games to be hosted on. So I'm really bullish on that. Also, D-Race. I don't know where the D-Race be at. Let's see if I can find it over here. It's a gambling, betting on horses. You make your own horse and everything. They're your NFT. So really good projects. Not too low of market cap now, but micro caps are very good to start getting into because that's where you're gonna make your millions. Um, let's see. I pull it up actually on point market cap. Let's see how. Why is everything? Oh, that's what I cleared my cookies and my cache. Why everything was back to white mode? Burn my eyeballs. Look at that. One of my top 5. Solana. Like Phantom, Cardano. Unfortunately, Ethereum. It's because the king. It's probably gonna drop off eventually. But Luna, Solana, an Avalanche, Cosmos. I love Cosmos. Great project. It's going to be, blockchain interoperability, being able to connect all different blockchains to each other. Cosmos is going to be doing really good. Let's see how D-Race is doing. D-Race. Alright. Let's see. Alright. Finally flipped. Once we break this, it's set a higher high over there. We're gonna be looking pretty good. It's a micro. A little bit of money moves it a lot. Yeah. Looking good. We just gotta. Oh, we did break our arms. We got a higher low, higher high. Let's see what we got going on right here. Like that. It's gonna be like. Ooh, yeah, it's gonna have a struggle getting across that. It's gonna have to fight to get across that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's 11th attempt. That's an average 11th attempt. But it's coming to the point where, when this ascending triangle over here, it's gonna be forced to make a move. I don't see any high volume going on yet, any abnormal volume. But D-Race, maybe, definitely something to start getting ready to look into. Let's see, I'm not logging in right now. I shouldn't have cleared my damn cache. There we go. Let's take a D-Race real quick. This is D-Race. Betting on horses, and your horse is your own NFT. What's it's more bullish? Well, there's a lot more bullish than that, but gambling is a high stake thing, especially horse betting and horse racing. People pay a lot of money for that, especially now being able to do it online and in the metaverse. I'll just sitting back, chilling, like watching a horse game up in here. The official watch. So D-Race definitely be good. What about the other one? I give one more micro cap. One micro cap. Shit, doing good. Open Forged. And the information on it. I'm on. What are they doing? Or is it just being coin market cap? Vulcan Forge is another good project. It's not like a super micro cap, but 30 days. So yeah, it's coming off, it's bouncing off. Feel good about it. So yeah, had a little head and shoulders. Let's see, everyone, the double bottoms don't really always play out, so everyone knows. And it's a double bottom is like a 2-star pattern. It's like a 25% win rate. Double top is normally what plays out. And inverse head and shoulders also not really something that would really play out as much as a regular head and shoulders like we kind of have here. We have our, shoulder, head, right shoulder, across the neckline, collapsed. But now we're seeing some momentum over here. We're looking good. I think we found our low. Remember? So yeah, I think that's it. I have all these referral links and everything over in the Discord. I'm not gonna post all my referral links. So I'll post my invite code where all my referral links are. So you could do all that. I have a full video out, recorded one. Well, I already recorded one. I just never finished editing it because I did this for one of the students. Oh god, take a look at Phantom real quick. It's my number one. Actually, let's take Phantom over. Let's take Phantom over here. Let's check out my Phantom. Why are my lines so fucking bright? Killing me over here. Man. 40, 30, sorry. They mess up my vision. Trying to see my lines. Alright. There we go. I don't really need them to be exactly where they are. I should just get rid of the line. I could see the levels clear enough. Alright, got our Bollinger Bands and bullish divergence over here. Gotta change the color on that. Make it thicker. It's that's why they got this big green dot right here. This is a very, very, very bullish thing right here. Happened is green dot is a big buy signal, especially when we see that the money flow is not already in the green. You want to see these money when the money flows in the red and coming out. On this one we had it, money flow was coming into the red. On this one the money flow is already in the green. You want to kind of catch these as they're coming up. That's on the daily. Let me lower these. Let's I can't even, why is so many damn indicators open? I gotta lower these so I can see them. I'm trying to see all these EMAs. Oh, I put on the double EMA. Volatility bands. Come back to that. This is what else you get. You get market cipher. This is what you'll get. I gotta give this out to the students ASAP. coming to that point. Oh, and we got a bullish candle, a bullish candle right here. It's a good thing. Blood diamond on point. Let us know. X manipulation. It's not on that one. Oh, these are my auto trend lines. I can take out these ones and put these ones on. Zoom back the more it pops in. And then get zoom back out and get your trend line look. My version of spider lines. Alright, I already crossed that trend right there. Look at that break. Boom, 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 boom. But we gotta get through this. There's gonna be our resistance, even more resistance, and that is going to be some resistance. This we should be able to break through. That resistance right there. Which again, this is just volume, just like you would see at the bottom, but this is volume on price instead of volume on candles. It's a visible price, and it doesn't always come like this. I changed my settings from 24 to 200 so I could see more of what's going on. Like if you add it onto yours, it'll look like this, and you'd be like, why doesn't it look all, like the NDFIs? Why does it look all big and clunky? It gives you the same type of information, but it's just you don't get as much in it. So I just changed this to 200, and then I get a kind of better feel of where we're gonna have some easy movement through. This was an easy movement through. It shouldn't be. It's right up there. Wasn't anything really here besides this, and that came from that. It also grows with how much you put your chart on, how many bars are in your chart. Calculates it. That's that. Alright. Phantom is definitely looking good. Okay, right this Fibonacci level. Where is my um channel's pretty helpful too, but it's not that one. Which one? It's I don't know why I'm in that. This one on me. No, this other one is put on. The other one is put on. Yeah, try to guess. No. Why does it keep doing that to me? Ah, here we go. That's what I want. Press volume. These are actually very helpful. These are also volumes, not support resistance necessarily. They are the volume, compressed volume levels. So really high volume of activity. So it's like calculating all these, and that's what gave us this huge line. And this is based off of that. And it could be used as support and resistance. But our trend, let's go on the day and see how Phantom's gonna do. Coming up to break it. If we do break it, we need to set this new higher high, and we need to set a new higher high. Should be an area. We need to break like this area cleanly. It'll be great if we can break above that. If we break that level, and we're talking, take your orders. And we don't have to worry about that's not the right spot. 30% to our next resistance. All-time high would be 43%. All right, Phantom's definitely coming back. But it did break out of its trend. Let's go back and get some more lines in there. Alright. Oh, I still have this on. Hide those buy and sells. A long buy on this. It's on the 15-minute chart. You've been able to just sit this indicator. This is one of my indicators. I haven't gave out yet, but eventually I will for the long-term students. Like $15 a month. That's it. Killing any other academy thing out there. $500 for one course with crypto face. Yeah, I think that's about it for this ending of, even though we did our book reading with one of the students, and then I just took it a little bit further with a little bit of, resources to, a little showing you Libero, Anchor, so we can check out Baby Libero, which you get the same 158,000 APY, but you also get back 10% in Libero tokens. So it's also what's it called? Fork. But this one, I don't feel too comfortable telling people, like, oh, go invest in this, because I haven't checked too deeply into like the partners and its white paper and tokenomics fundamentals. Like, I know the barrel's legit and it is doing great. But I'm pretty sure, but I would not say anything, especially I'm not a financial advisor. This isn't financial advice. This is for educational, entertainment purpose only. So, you always got to do your own research. And by doing your own research, will mean I'll show you how to do the research. Because most YouTubers you see out there won't show you how to do the research. But anytime we have a one-on-one call, or anytime you call me, request, can we do a one-on-one? I'll do your research with you. So, I'll say I'm not a financial advisor. This is for educational purposes only. Let me do your research for you. Come check out CryptNation. Join us. The link will be in the description somewhere. I think that's about it. Check out the bubbles real quick. Go. Any other projects popping off on the hourly chart? Anchor's gonna pull away again. You get into Anchor. It's the safest bet. Well, it's such a safe bet because you're staking. For 20, you're not getting 20% for a stable coin. Well, there's some places maybe, but not so easily. Not one platform. Do it with just the wallet you have. Put your TUSD in there and get your 20%. So go to Anchor, do that. APY fluctuates. Interest you get, and you can protect it. You can also borrow back against it. You can borrow. You can ask, become, a lender, become your own bank, start borrowing your own earnings out to people. So Anchor's a great protocol. So yeah, Splinterlands, Storm Capital, staking, keep that up. Something to do with all that. Epic Heroes, the game for it. D-Race. Yeah, Anchor, Luna, Phantom. Keep those things in mind. You got your websites, you got Evaya, you got Mazari.io, which will give you all your types of like on-chain metrics and basically ranking systems. You also got one more site I'll show you before I get out of here. I don't know how to spell it, so I gotta get to it. Yeah. Also, yeah, NordVPN or Unstoppable Domains. Make sure you grab it. A link will be in the description. You'll get your $20 back for your domain, and you'll get like 70% off your VPN. You also get a dedicated VPN with a dedicated IP address with Nord, and a double VPN, or VPN on top of a VPN. You also get a VPN over Onion and a peer-to-peer VPN. So it's by far the best VPN out there. The last one I want to give you guys, let you guys know about, is I cleared my damn cache. I can't type it in. Maybe I can. Let's see if it's. There we go. All right, just come up. Yeah. So it's crowntrading.net. And they're always doing updates and everything. This is where you can get a lot of perfect on-chain metrics. In all different types of categories. You can change your little tickers up here so you can see what kind of coins you want to watch whenever you're doing your research. You can at least keep an eye on them. I didn't go through. You can do that. I think I already changed these. I don't know why is it not doing that. Oh, I gotta click on it. That's why. Yeah. Phantom did come up. Phantom. So yeah, you can keep an eye on your coins. See what's going on. Can't wait for what's it called? Sunday swap. Got the reverse ISO going on, delegated. Waiting for my drop. Of course, I say I'm gonna end it, and I keep on just going with more stuff. If you're into ADA, you know about drip drops. It's gonna be a big project. But yeah, I'll get into that after this. Though, over here you can see everything about what's going on with Bitcoin, and you can see, the whales, what they're doing. You can see the hodlers versus the long term holders. I mean, the hodlers versus the short term holders. You see the leverage. We knocked out a nice amount of leverage. I remember we was pushing up the leverage again after we had it up here. I was excited when we finally pumped it back down here. I mean, pushed it back down here. Then we started pumping it back up. Started to bring it back down. Got the fear and greed over here. The Newpol, which is the people in lost, but didn't take profit yet, so it's it's unrealized. Network, Bitcoin transactions, doing good. There we go. 1 year trading, hash rate's going up. Funds holding, digital asset holding strategies fund. Funds premium. Prices. And the last one, global. The global Bitcoin dominance, the volume, and the market cap. So that's that. And then to wrap things up, if you're an ADA fan, because I know we all love that Cardano gang. Even though no, everyone hates it. Not everyone. Strong ass community, strongest community out there. This is why I, dedicated to promoting my server because, and only to the right people because I know that community is what drives things home. Without a community, nothing works. Fundamentals can be great. Tokenomics can be great. You could be giving away $1 million a day. If you don't have a community, there's no one using your service. You're alone. Nothing's gonna work. Community is the number one most important thing. So keep that as a core focus. So we want the best people with the right mindset. Long-term financial freedom, helping each other. Giving is better than receiving. If all of us give, we all give our ideas, our opinion, our resources, what we have. All the stuff I bought, like books and indicators I've made, to give them out. Everyone else giving out what they got. We don't have to spend money. We just get everything. It's a concept that no other servers are doing. So check us out. But for us, ADA people, most of us, well, a lot of them hate because they say it's a stable coin because it stayed at the dollar for so long or around $1. But drip drops is where you can claim every single airdrop on the Cardano blockchain, no matter what, right from your spot. So you can just claim all your airdrops from one place without having to go from DEX to DEX to DEX to DEX to DEX, trying to find out where all your airdrops are at. You come here, and you pay. You could pick up to 10 at one time. It's a 5 ADA fee, but they give you 2.5 ADA back to cover the cost of the IMX transfer or something like that. So it's really only a 2.5 ADA fee. So basically two ADA to be able to claim all of your airdrops in one spot. Is a really good thing. And then you can even like come and check out the website, Telegram, Discord, of these projects. Most of these, are just starting out. Some of them are like launching, have a little decks, but some of them are, really just starting out. But yeah, that's Drip Drops. It's a really cool place, really simple place. You just can collect all your drops. So that is it. I'm gonna wrap it up. All y'all have a good night. Hope to see you. Like and subscribe. Get this content out to other people. The more people that like and subscribe it, The more people it helps, the more people that see the content, first of all, and second, the more likes, the subscribes I get, it actually makes me feel like I'm actually doing something instead of just teaching the class and then putting them on YouTube just to try and help. I'd actually go 100%, putting videos, pre-record videos out on YouTube, full content. So it'll help me, it'll help the community, it'll help this crypto space. Smash that like button, break that like button, just help it out. We're all in this together. But crypto's going to the moon.